All right. Good afternoon, everyone. And good morning and good evening from wherever you're watching me. Yeah, of course, my name is Isaac. I am known as Jackpot. I am the director of Jackpot FX and I teach and trade forex, basically. And it's so nice having you all. I'm sorry it took a little while before I uploaded the part 2, like I promised the last time. Yeah, I know many of you watched the part 1 of this series on fundamental analysis. All right, I plan to divide the video, the session, the series into 4 parts, so that I will have time to explain most of the elements, and then the last part I'll teach you how to trade with it. Once you understand the concept, it's very easy to trade fundamental analysis, and then you understand why some traders will tell you I only trade on NFP, I only trade CPI, I only trade on FOMC releases. They will tell you they only trade monetary policy news. Sometimes some people trade just once a month and they are done, right? And you tend to ask yourself, how did they do it? I'm going to show you the secret. All right, welcome to the video. In the description of this video, there would be, of course, many of those things you're looking for. The link to my channel is right there. And then you have questions for me, you want to reach out to me, inquiries on any of my services, and you want to have a one-on-one session with me as well, you would see my email and my phone number right there to reach out to me. All right, yeah, let's get straight to the video. All right, today I want to talk about central banks. Now, you see, anything called fundamental analysis, anything called economy, all right, revolves around the currency, each currency, right? Are you getting? Forex itself is foreign exchange. So foreign exchange, exchanging what? Currencies, right? Now, what manages these currencies, or who manages these currencies? The central banks, right? Now, let's now study the central banks. If these central banks manages these currencies that we forex traders claim to trade, then why not study them and try to think the way they think? Does that make sense? Good. Now, let us try to study them and understand their behavior. How do they think? What do they do? If this happens, what's their next move? So, when you know these moves, you can interpret their reactions. You can even explain their, you know, their expectations, and then you can predict the way forward. Are you getting that? So imagine those big moves that happen in the market. Imagine if you are able to catch it. Imagine you are able to get into the move before everybody else. Those big spikes, right? Imagine on an NFP day when there's always those long candlesticks for a number of minutes, right? Imagine if you catch the move from the beginning, all those sniper entries, right? And you're like, boom, I got it. Right? Now, so we have different currencies, right? So we have the AUD. For the AUD, I think the Central Bank of Australia is called Reserve Bank. Is it Reserve Bank of Australia or something? I'm sorry, I forgot that. But for Canada, I know for Canada is Bank of Canada, right? BOC. Then CHF we have as the Switzerland National Bank, right? For Chinese, I think Chinese is Chinese National Bank or something. I don't know that. I'm sorry. Now we have the euro. We have the euro as something around the European Union or something. Now we have the GBP as the Bank of England, the the Federal Reserve for the US, right? And then the NZD should be yeah, I think I know that. That's Reserve Bank of New Zealand. Yes, that's it. All right. So, but what I'm saying is, okay, let's go to Africa, right? So we have in Nigeria, we have the Central Bank of Nigeria. All right. So that is just what this means. Now, what is the work of all these central banks? Why are they there? They are there to monitor the economy. Now, they take note of, I think, about 4 to 5 major factors. Those are their major concerns. Now, they look at the production, called the production rate. Now, they want to look at what is the country producing. When the country is producing something, it generates revenue for the country, right? Good. So that means it brings money into the country. You understand? So that is what is the country producing, right? And if you also look at production, it's a way into employment too, right? Because when they're producing something, that means there are some people that are working in line of that production to make that thing happen, right? So that leads me to the next thing. They also look at employment rate. They look at what is the number of employed people and the number of people that are not working. What is the number of jobless? What is the joblessness rate, unemployment rate, right? When people are working, when people are getting money, getting paid, it shows that they will spend money, right? So there is circulation in the economy. There is money flow. You get that? And then they also look at growth. Now, growth in the sense that is the economy buoyant? Look at last month's growth rate to this month. What is the difference? Are we getting better? What's the revenue rate to now? You understand? So they make calculation of things like that and they monitor it. So we also look at inflation. Inflation in sense of price of day-to-day goods and services, retail sales and all that, right? So they look at consumer price index. That's another name for inflation, right? They look at what people are buying. What's the price of goods and services of retail goods and services last month to this month? All right. So did it increase? Did it decrease? Did people is price getting costlier for people? You understand? And then how are people coping with it? When price gets costlier, it shows that are people having the money to buy it. So when people have the money to buy it, they might be less worried, right? But when things are getting costlier and people are not buying it, it shows that people are looking for other alternatives. Why are they looking for other alternatives? Maybe there's no money to buy it. They start looking at all those factors. You understand? This is how they think, right? And we also have the GDP, gross domestic production or something, right? Now, this GDP is talking about the growth rate, right, of the economy itself, right? So we are looking at, okay, what is the company and the country producing? What's the health of the economy, basically? All right. So these are major things that the central banks put their binoculars on and they keep watch on. All right. So this is what drives them to make their policies. Right. Now, when they notice that, okay, the economy is lacking behind or the economy is falling or failing, right, they look at all these factors I just gave you. Take, for example, inflation. Most countries, especially developed countries, right, like the USA, the UK, and all that, they have their inflation target at 2%. They don't want it to be above and they want it to be below. So when it's above 2%, they do something. The central bank make their move. Are you getting it? You're connecting the dots, right? So they make their move in respect to make that inflation rate come down back to their 2%. So let me give an example of the central bank of Nigeria, right? So our inflation rate is currently at, I think, 27%, if I'm not mistaken. Now that is far beyond, right? Now, so they are now looking at, okay, what do we do to return inflation back to 2%? That's a big work, right? So let me give you another example. Look at CHF here, right? CHF CPI. Now, their target is to make the I want to see if they bring something like that here. Okay, it's not there. But most central banks have their target at 2%. Now, the previous was 0.0%. Forecast is 0.2. Actual is 0.00. Now, what they are planning is, let us take this to 2%. You understand? Now it's not going to happen in a day, but the central banks now start making policies that tend to shape the economy, shape their vision towards acquiring that target. That is what, these are pictures of what you see on your chart. So before you start blaming yourself, why did CPI go up today? Why did it come down tomorrow? What happened? These are all numbers that will be released. And as you are watching these numbers, we also have traders watching it as well. We also have central banks also watching it as well, looking at, okay, what is happening in the economy. This shape their decisions. One of their decisions is the interest rate, right? This helps them to, let me zoom out a little so that you can, now I think TradingView gives, yeah, look at this. Now this look at this corner of my screen. I don't know if you can see that. I'm coming. I just want to show you this corner. Very good. Now look at this. Central bank rates. Now if you follow forex very well, you will remember that CAD reduced their interest rate from 3.0 to 2.75. That means they reduced by 25 basis points last month. I think I remember that I traded it. I think Euro also reduced theirs. Oh no, Euro left their rate untouched. GBP also left their rate untouched in March. Is it March or April? Either of the two. I remember I traded this news, right? Same thing with Federal Reserves. I think we're having one of a federal, yeah, I think we have a Fed meeting coming up this month. We have a GBP, yeah, Bank of England meeting also coming up this month. Right now, why do they reduce their rate, interest rate? Why did they increase their interest rate? What was the effect? Now we call something quantitative easing, and we call something quantitative tightening. Let me give you a quick run through of that. Right, quantitative easing is a monetary policy used by central banks to stimulate fundamental activities by purchasing financial assets such as government bonds. This approach aims to increase the monetary supply, lower interest rate, and encourage. Now that's a bit of grammar. I would explain it in quick form right now. Now this is a way whereby government buy, central bank buy all government bonds. It's as if they are printing money into the economy. Yes, there's no money in the economy, but they are actively printing money. Take for example, let's say they will tell you their target, right? Inflation is high, but once it's hit this point, we are going to start printing money into the economy. They want to stimulate the economy. So this kind of effect, if you know how to interpret news very well, most of these bodies they would tell the public, maybe through press release, those press conferences you will see on your forex factory. They shouldn't just be left out like that. Take for example, yeah, this SMB chairman Shilenge or something speaks. Now if you check this out, this man would say something that would have effects on the economy. If you check CHF PS this morning, it has been volatile a lot. That means this man's words has effects, right? So they would give you an impact. Okay, we are going to start printing. I think CAD did that in March when they said, no, they did that in February when they said from March they are going to start quantitative easing. And if you check CAD PS, GB CAD, Euro CAD started flying up. CAD was weak. Reason is because they were buying their bonds. Investors didn't trust the economy anymore. So the economy was weak, right? So it was just in the safe hands of the central banks. You understand? They knew inflation was high, right? The currency is, dying, and they just need to do something about it. They said the other one is quantitative tightening. Now, quantitative tightening is when, especially when the economy is buoyant. I think a kind of economy that did that, a central bank that did that was JPY. Yeah, yeah, I can't remember the year very well, but I remember there was a time whereby they had to start hiking interest rate policies, right? Now, all of this, you might not really get it at once, but when we start the practical, you will understand what they mean and how you can interpret them into your trading, right? But I need you to get the concepts very well. Central banks take note of most of these things, all right? You are looking at the NFPs. NFPs is non-farm payroll. NFP deals with employment. So before you say you want to trade in NFP, you want to start looking at related news related to employment. So these are those numbers. You don't just bring it there. They don't just write it all like okay, let's just print something from our head. Boom. No, these are revised datas that are being collected, and then the government body are looking at it. All right. CPI is not just coming there for coming sake. CPI is coming out of okay, yes, these guys, there's inflation in the country. Okay, inflation is low. Okay, our target is being met. You understand? Now, aside all those news, even speeches from central government and central bank officers, you see BOC governor or Fed Powell's, right? I'm sure everybody knows that guy, right? You would hear them say a lot, and you're like, oh, yes, this man has come again, right? Their speech has meaning, right? Another thing I want to also take note of is expert analysis, all right? Now, before we end the video, you see all these articles, right? On your trade on your forex factory where you see these files, right? Take a moment to always read what it is about, right? Click on the full stories. It gives you an insight of what that news speaks on, right? In fact, most of the articles we give you four major things that you can work with. Number one, four things you should be looking for when you want to trade in news. Four things you should be looking for when you want to trade in news. Number one is uh, number one is what the currency is about, right? So the currency is okay, AUD or let's say USD right here, right? Number two, you want to look at what direction it is this going. Is this, when you are looking at the forecast here, right? You are looking at okay, the forecast, are they expecting it to be higher than the previous or to be lower than the previous, right? So that way you are knowing what to go. Then secondly, then back on the third, sorry, give me just a second right there. I just connect this guy. All right. Now, on the third, you are also looking at this kind of. Sorry, just a second. I'm sorry, I'm having an issue with my microphone here. All right, just a second. All right, thank you. Sorry about that. Now, secondly, you are looking at what are we expecting? You see this usual effect, actual greater than forecast is good for currency, can be a guide, all right, at least for a beginner, right? Can be a very good guide. Now, it's not always like that. Some can be that you are looking for something that is lesser than forecast. That will be good for the currency. Now I'll be showing you what it means in the next video. Alright. So in the next video I'm going to be showing you, okay, when you see Euro AUD and you have a news that has to do with Euro, how do you understand what will happen with Euro AUD and what will happen with AUD NZ? In this place we have Euro AUD. Euro AUD is the quote right there, right, in Euro AUD, while AUD NZD, AUD is the base, right? So you are looking at how do I understand. I'm going to be showing that in the next video, right? The third thing is to look for the reason for this direction. Okay, if they are saying they are going to increase rates, or if they are going to say that okay, employment rate is getting better or is getting lower, why do they say so? Okay, what's the data, what's the prediction, right? Why is everybody saying that? Now this is where you start looking at articles, you start looking for releases here and there, and that takes me to the fourth. You are looking for analyst expectations. Trust me, you are a beginner. I did this when I started. All right, and this takes you back to this place. You want to see what people are expecting. I want to see there should be something that I'm coming if I can see a news on that. Good. You can see this ISM, right? Easy Market did a YouTube video on it ahead of it. Many of this, all these analysts would give you, you know, reviews, right, previews on it before it is being released. Look at this federal fund rate. Yeah, that's very good. This Wednesday, we are having FOMC minutes, right? They will be having something to do with their rate, and in this news, right, they are expected to hold their interest rate 4.5 still at 4.5, right? Now, aside the holding rate, there's something we call an hawkish tone and a dovish tone, right? Now, the fact that a country cuts interest rate doesn't mean the currency will be weak automatically. I fell victim of that when I started. I won't lie to you. Now, the fact that a currency, a central bank increases their interest rate doesn't mean it's going to go up automatically. We also look at the tone. Are they on the hawkish side or are they on the dovish side? Alright, so are they conservative? Are they being careful, or are they sure? Are they so positive about their economy? These are things you want to take note of, trust me. Alright, I'm going to be showing you that in the next video as well. So we have this for this one now for FOMC minutes. We are looking at we are expecting them to hold their interest rate. Now you will see that aside me saying that it has not happened, but you have had a lot of articles about this. These guys are experts, trust me. They are saying what they believe. You should look out for what they're saying. These guys, look at this one, for example. Fed expected to hold rates. I have not read it and I said that earlier, right? Now, this is because I have been doing this for a while, right? Now, when I started, I was also a novice, just like you. I don't know anything, right? Now, these guys will say, look at this, FOMC, no hurry to cut rates. YBOE, these guys would give you an insight of what to expect. Now, when you click on it, let me see, look at this one we were talking about. When you click on it, you can read through. This news, these articles will give you insights on what to expect. They would even give you a guideline to your predictions. So imagine having all of this knowledge and you then go back to your chart and you continue with your technical analysis. You have a background knowledge of fundamental. Okay, USD is expected to hold their rate. What is expected? Now, when you read a news like this, okay, are they having a bullish tone? Are they having a dovish tone? Are they having a hawkish tone? Hawkish means that hawkish is just like in similarity to bullish. Alright, so when something is hawkish, it means that they want it to go up. Alright, and when it's dovish, they're looking at it to come down. Alright, so that means now when you see USD is hawkish here. Oh, okay. Now you are looking at, I'm looking to buy USD CAD, or I'm looking to buy USD JPY. You understand? Just an example. I'm not giving signals, okay? That's not a financial advice. Please don't get me wrong. Alright? Now, this is going to guide your decisions. Trust me. Especially when you are going to make whatever you want to make. Alright? No move in May, but June cut and play. Now, aside you having an insight of what happens that moment, you're also looking at the future. They are looking at the next meeting. Alright, so you are knowing, okay, what will happen the months to come, what their expectations. You have started thinking like them. You have started looking at their vision. They will tell you what they are looking at. Okay, we are expecting inflation to come to this. So when you see CPI next month, you know that, oh, CPI, it came down. Oh, this was not what we were looking for. Powell said he's looking for CPI to come down to 2.1 or 2 point something. Oh, it went higher again. Now you are looking at the same way, you are worrying the same way they are worrying. So you are looking at, okay, they are going to cut rates, or they are going to do this. So you are having, your mindset shifts. as a professional trader, as somebody that understands fundamental analysis. Do you understand that? Do you get that? So it's very, very easy, but if you understand the concept, yeah, trust me, if you understand this concept, you can trade forex like a pro. All right? Yeah, 25 minutes like that. 25 minutes gone like 25 seconds, right? I believe you all get something from this session. I believe I didn't waste your time. All right? Yeah. Thank you so much for having me. Thank you for this. I promise the next video is going to be as quick as possible. Yeah, I know I've been keeping you waiting, but I won't keep you waiting again. All right? Trust me. Thank you for joining. My name is Isaac. I love you all. Bye for now.